Hey folks, welcome to the weekend technical analysis update video by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video is for Monday, July 30th through Friday, August 3rd, 2012. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. All right, folks. Let's get right into it. Two monster rallies to end the week, basically 400 points on the Dow Jones Industrial Average, and again, our overall target max upside move is now within sight. And this is a level I've given out to my members at InTheMoneyStocks.com for quite some time, and you can clearly see it right here. I mean, it's amazing because it's the retrace of a neckline from a head and shoulders pattern, which is very, very significant. Let me zoom out and show that to you right now. So again, this was a head and shoulders that we had called out earlier in the year, and the market ultimately played it perfectly. So here it was, shoulder, head, shoulder, your neckline, you broke and you completed all the way down here. Now, as the market has gone sideways to up for the last couple months, we've been slowly getting back to that neckline. In addition, if you connect the two pivot highs, one from the 2nd of April and the next one from the May 1st time frame, you get a line which intersects that line. That is the target of the market, folks. That is where this market is headed, in my opinion. Once it achieves that, we will see significant downside. All right, I think probably by mid next week we will get there. There's a possibility we get there or as soon as Monday, but more than likely we'll get a pause day. Either way, that is your target. Based on price in the PPT methodology, that is what you are looking for. That's simple. All right, and again, it really shouldn't shock anyone to see rallies like this. I mean, they come out, Draghi comes out from the ECB and makes these comments. I mean, 2 days in a row, he basically came out with comments which shot the market higher. And they have that ability right now. You know, they're using the bullets in their gun. Now, they're almost empty, but they're not empty yet. So, I mean, you have to accept that and say, hey, listen, if I'm going to short the market, I have to, and I better make sure it's a very, very good level. Now, we've been short a couple different things, and last week we took half off the table on our USO short for a great profit, as well as on the corn short, CORN. We were short corn. We made some good money there. But the bottom line is, as long as you have levels and you know your targets and you're not getting too greedy, you can short if you know the right levels. Now, once you get up to this level here, all right, this one right here, then I think you can short almost anything. But until then, it's going to be a tricky market. I mean, there's not that much more to go. I mean, you get basically at $1.50 to go up on the spiders, which is 10, 15 points on the S&P 500. But either way, that's your short-term target, very simply had. All right, now if we look back at this week, it was an amazing week because we started the week to the downside. I mean, here's where you closed a week ago from Friday. You gapped down, sold off a good portion of the early week, and then Thursday, Friday was just monumental rallies. Now, there wasn't a ton of volume. There was a good volume on Friday, but not a lot of volume on Thursday. Friday, you could see a lot of volume because that news break happened around the midday session on Friday, perfectly scheduled for light volume. And again, notice how in Europe, timing wise, that was like Friday late night, if not Saturday morning. Here in the US, it was perfectly done because it was midday. I mean, they really time it for the US markets. It's amazing how much the US markets control everything and how even officials in Europe time things for the US markets. Right, everything still is based off the US market, regardless of what anyone else tells you. It really is. Okay? Now, what we want to do next is look at the dollar. The dollar, again, has been on a wild ride, but one thing that I think tells us that we're close to a short-term top on the dollar is that the market had this huge rally and the dollar fell. Now, initially it popped. If we go to the intraday chart here, here's where the news from the ECB was released, from Draghi. And you see the dollar pop, but then it came right back in. And you're not seeing the dollar really. You should have seen if the market was going to really be significant, the dollar should be falling more than it is and the euro should be rallying. The fact that the dollar is not falling more, I should say, is going to the fact that we don't have any concrete news. I mean, everything that's come out from the ECB has just been rumors or comments. There's no action yet. And I would say that that's a very key factor in thinking about shorting the market. Because really they're already factoring in the news, so if the news does come, the markets won't have much more than a one-day pop off of it. And if it doesn't happen, then you have great downside because the markets will collapse all the way back down. So you see how it works in your favor. But again, you must look at that SPY level. All right, and what I thought was very interesting here was the dollar broke out, never confirmed. Confirmation is a proprietary technique here at InTheMoneyStocks.com, and it was interesting how the markets broke above that level. The amateur thinks it's a breakout, but we know better here at In the Money Stocks, and we didn't get fooled. And the market, obviously, the dollar came back in there. Now, confirmation again, guys. I'm not going to teach it here in the free video because, frankly, you guys have to join up to find out. But there's a 7-day free trial. 7-day free trial here at InTheMoneyStocks.com. That's InTheMoneyStocks.com. And you can take the Research Center 7-day free trial, which is for swing traders and investors. And we'll teach you. We have live broadcasts. We have swing trade alerts. You name it, it's all included in that Research Center. You can go to our website and find out what's in there. And if you're more of a day trader, then the Intraday Stock Chat 7-day free trial is for you. You want live interaction. You want live charts. You want live analysis and calls. That is where it is right there. And there's both 7-day free trials for both. You can actually do both free trials. That's fine, too, if you want to try them both out. All right? Let's go on to the GLD, folks. The GLD had a great breakout here. Let me just show you this. So you had a beautiful trend line sloping down. You came up here on Wednesday. Thursday you broke out. Friday you continued higher. I will look to short the GLD if it gets to the 200, not before then. Ultimately, the GLD will make new 52-week lows this year, but it's later this year. Right now, you want to look for a short around the 200 MA. Big level around the 200 MA, guys. Monstrous level. All right, let's take a look at the USO. USO again. These are some key levels. I'm going to show you where I shorted it this basically a week ago from Friday. I shorted it, which was right here. Perfect short. We covered our first half of our short down here. Now you're getting a bear flag, which bodes well for our second half of the short. The beauty of this trade is, and our methodology dictates, that when you take half off the table for a profit, you put a break-even stop on the second half, so you can't lose. It's a guaranteed winning trade. And this way, if oil falls drastically, we make a huge amount of money on the second half. And if it happens to go back up, we stop ourselves out for a break even, and the first half was still making it a winning trade. And that's the discipline and methodology that you must employ if you're going to be a successful swing trader, investor, or day trader. You have to know these principles, folks. This is what it comes down to. All right, we have proprietary analysis here. We'll teach you confirmation, signal, three-tailed theory, river theory, you name it. There's tons of it. Time counts is another thing here that we've developed, which is amazingly accurate and helps us make money every day in the markets. So many proprietary techniques at InTheMoneyStocks.com. It's here for you. Let's take a quick look at JP Morgan and Apple. JP Morgan, great day on Friday, but it's piercing the 200 MA and into a lot of resistance here. All right, so you have resistance here, and believe it or not, just a little bit above, you have more resistance. So even though JPM's had a great move here, I actually think that you might be coming to a stall-out level. I'll be looking at this as a possible short next week if the setup is correct. Apple had poor earnings last week, so again, the stock hasn't performed that well, but did have a good bounce back on Friday. And again, you can see it's consolidating off of the drop. This is actually the beginnings of a bearish pattern, but it did get above the that's a 50 MA, which could be a little bit of a case study here. We'll have to see how that shapes up this coming week. All right, but again, I think if this pattern plays out, we should get a good shorting opportunity on Apple, maybe later next week. I will give out the call via the Research Center if I need to, all right, or if it sets up correctly. Goldman Sachs, 200 MA, that's your target right there. It's also a little bit of a gap window right here, so there's going to be a good level of resistance here, and then just above the 200, you have also gap fill right there. So this is going to be a huge resistance on Goldman Sachs. So you can see a lot of charts are coming, just like the spiders is just a little ways away from a major resistance. Goldman Sachs is, JPM is. I mean, a lot of these stocks are showing us the same things, which is good. When you see leading stocks confirming what you're seeing on the S&P 500 or the SPY, very, very positive. Very good. Now, many of you may want to know about Facebook. Facebook actually rallied nicely off the lows of the day here, still down over $3 on Friday off of earnings. To be honest, I'm not going to look at it until it's $20. Right around 20, I'll start to get interested. Overall, I think there's a lot of value there. I love the fact that people are so bearish. Now I just want to see it come down a little bit more, and I will be looking at a long entry. All right, swing trade alerts will be out Sunday. Be ready for those. No Hype Live Sunday night, which is a live broadcast, which is part of the Research Center with live charts and live questions. It's going to be a hectic, crazy, but profitable week. Be ready because there's lots of money to be made. Again, we'll see you here, a 7-day free trial at InTheMoneyStocks.com. Take care.